Good afternoon, this is Todd Colvin coming to you from the floor of the CME Group. We are looking at rates and 10-year note yields trade in a very narrow range, about a 4 basis point range on Monday, roughly unchanged from where we closed on Friday. Not a whole lot of excitement in the bond market as we're waiting to see what happens possibly overseas with the Chinese trade talks, trade war, tariffs. Likewise, we've got to see what continues to happen over in Europe and the relationship between European and U.S. bonds. And again, then we have the data here with the Fed. And so there's a lot of things that are happening. But Monday, we didn't see a whole lot of price action, despite the fact that we had a big week last week. And if you look at market volatility remains subdued. It got hit pretty hard after the Fed meeting last week. We saw it trade down to some pretty low levels. We did not see that continue. We saw that kind of hold off. Obviously, the big fear here, or the big uncertainty, is where do we go in the back end of the curve, given the fact that the short end of the curve is going to rise, or yields are going to rise because the Fed is going to be raising rates more aggressively than was thought a few months ago. But there's a lot of uncertainty in the back end of the curve, whether it's inflation, whether it's growth, whether it's geopolitical, whether it's overseas. There's a lot of things mixed into that bowl right now. And as you saw, since the Fed meeting, 10-year Treasury yields have only traded lower, despite the fact that the Fed has talked about the ramping up the economy, talked about possibility of inflation, talked about growth, and being very impressed with the economy, but doesn't seem to have an adverse effect on 10-year yields, which have been pulling back. And if we look at the trade of pain, is what we call it. Trade of pain is lower yields, and right now we didn't see lower yields today, but we didn't see them go up either. So I think right now that still is going to hurt as we see net positioning of leverage funds remain net short. And lastly, let's talk about what could happen, what could change things a little bit this week. Well, there's an ECB panel in Portugal where we'll see ECB President Draghi, we'll see Mr. Kuroda out of Japan, and we'll also see Fed Chair Powell speaking there, which could be, I believe, his first international presence as Fed Chair. And that could be something if they talk about coordination, they talk about how they're going to approach Fed policy. There are still a lot of differences going on between what's happening in Japan and Europe and the United States. And the United States right now seems to be taking the lead in raising rates and getting out of the 2008-2009 accords, we'll call them, as they took interest rates down to zero, whereas the Japanese and the Europeans aren't quite there yet, although the Europeans are talking about it with people scratching their heads. Maybe we'll get some clarity from that. But right now, the bond market seems to be hovering, waiting for that next event as yields hover near the lows of the post-FOMC trade. This is Todd Colvin coming to you from the floor of the CME Group.